Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Welcome back to another episode of Where Should I Invest? My name is Sarah Larbi. I'm excited to have you guys back on today. We've got some awesome guests as well. Today we have James Lloyd and also Voytek Mardula, who are investing in Detroit in the USA. And it's actually quite an interesting conversation because the markets are quite different, but the numbers look really good. So I remember leaving this podcast because I record them quite ahead of time thinking I should look into US investing a little bit and just diversify. So that's a super interesting podcast. And also it is week 2 of my 9-to-5 retirement. But, ironically, I'm still pretty busy. I've got a lot of podcasts I've been recording. I've had some Right Club stuff I was doing, but what's really cool is now I can be in charge of my own schedule. Even though it is busy, I probably am never going to be that person that stops working and stops progressing and stops, altogether. But it is really cool to be able to schedule what I want to schedule in my day. And I can really do things that I enjoy, like these podcasts, as an example, or coaching students or working on the Right Club stuff. So, it's unfortunate I can't do that from like Costa Rica or somewhere warmer right now with everything that's going on. But, time will come at some point and things will resume back to normal. So hopefully you guys enjoy the podcast. Send me a message if you want to come and say hi, if you want to be a guest on the podcast as well, if you've got a portfolio or things that you would like to share with the audience. And if you haven't done so and you're binging on these, feel free to leave a rating and review on Apple Podcasts or wherever else you guys listen to these podcasts. And also I'm reachable, sarahlarbi.com. You can send me a message there and we can connect. And other than that, guys, have a great weekend and talk to you all next Friday. James, Voytek, welcome to the show. How are you?
We're doing excellent. Thanks.
Great. Thank you.
Good. So I'm super excited to have you guys on. And I don't think we've had too many people on the show talking about the U.S. market. But before we get into all that good stuff, tell us a little bit about, each of you, how you got started in real estate investing and what you do. James, do you want to start?
For sure. So I'm the Canadian sales manager at usproperties.ca. I've been with the company for about 2 years. I was brought on, I already have a strong sales background, and I was brought on by Voytek. We're lifelong friends. Met, it was going to be coming on now 35 years ago in junior high school in Toronto. He started this amazing company, usproperties.ca. And I think about 2 years ago, he started to realize that he needed some sort of help with the sales on the front end. He's really busy, occupying most of his time with dealing with contractors, acquisition, a lot of the legal work. So I've come on board, and I'm really pleased and happy to be with you guys tonight and talk a little bit about our turnkey program down in the US.
Awesome. And Voytek, you want to go ahead?
Sure, absolutely. So, I've been a business owner for the last 20 years or so, 25 years. I was in the restaurant industry, nightclub industry in Montreal for about my first 5 years. Yeah. I went to McGill University, and, I moved back to Toronto in 2002 while I was doing retail. I was in apparel. We built a brand name clothing company. We sold all over the world, and we had subsequently a number of stores all over Canada. And I only really started in real estate about, I would say 10 years ago. I bought my first condo, which, with the intentions of just living in it, but ended up meeting my wife, Pamela, and we bought a house together, and it became landlords inadvertently. We started renting out that one property. The house that we ended up purchasing was actually a multi. And so, we ended up having some rental units there. And so, we were doing that for a few years. And about 4.5 years ago, I was introduced to the US market, and, my good friend, showed us a way where you can, earn significant cash flow from properties, which, as we know, in Canada is very difficult. So, I became really excited about the idea and started to look at the market a lot and started buying, initially expanding our own portfolio, sold a lot of assets here in Toronto in order to buy as many properties as we could down there. And then from that, evolved our company once we started acquiring assets for other investors.
So do you have any current Canadian assets, or are you fully into the US markets?
We recently bought a condo in Tremblant, which is by far our worst investment, but it's pretty, and it generates no cash flow. But the rest of them are in the US, specifically in Michigan.
All right. So in Michigan, in Detroit and area, or just Detroit?
Detroit, I would say about 90% of our properties are in Detroit, in greater Detroit area, and the rest are in the suburbs, like in immediate suburbs, about 20 minutes outside of downtown city core.
Okay.
So when I first got started in real estate investing, I listened to a lot of podcasts, and they were great, but they were American. And then I started investing in Canada, and I realized that there's a lot of differences. There's a lot of things that make sense there that don't make sense here, or things that you can't do in one region, but or country, and you can do it in the other. So I'm thinking like things like, that are different: taxes, financing, prices, all of the legal stuff.
Yeah.
Can you just actually walk us through some of the main differences for somebody wanting to invest and they're not sure exactly where they want to go, whether it's Canada or the US? What are some of those main differences?
Well, I would say the number one difference and what attracted me the most to the U.S. market was just the way their lending system is set up is so different from what we have to put up with here in Canada. Lending in the U.S. is asset-based. So essentially, if you want to go into a U.S. market, you can buy an unlimited amount of properties regardless of your personal income, which, as we know, is impossible here. You get to a few properties and the banks say, okay, no more for you, regardless of what your asset base is, right? Unless you're making, $10 million salary per year, which most people are not, you can't buy an infinitely large portfolio. In the US, I know people that have built 600-700 door portfolios in 5 years. Right? Which, extremely difficult to do here, that are generating massive cash flow, using the BRRRR method, just rinse and repeat. So that's the number one difference, I would say. Secondly, the business environment, it's easier to do business in the US, period. I think the restrictions are looser. It's business friendlier. You can close a transaction, within 7 days. We've closed transactions in 3 days, right? Mm-hmm. Where, this is from purchase to resale. You can double close transactions. There's so many different more options available to you. In Michigan, for instance, there's no requirement to use a lawyer in order to do a closing. So your closing packages are 15 pages long that everybody can understand, that you can move through the process much quicker. Right. It doesn't have to be this drawn out 60-day closing process. It could be a 6-day process, so I find that, and ultimately, the pricing is just so much better. It's so difficult to find a nice home in Canada for $50,000. I don't even know if that exists anymore. Maybe, out east, Maritimes, something along those. But outside of that, it's virtually impossible unless maybe you go way north, right? In Detroit, you can find properties at those prices on a regular basis that have equity possibilities that you can refinance, and then continue and then repeat and rinse and repeat. It's and as far as the company structure, there's so many more available resources. Like in Canada, we primarily use a corporation to hold real estate, right? Well, in the US, there are about 3 or 4 different vehicles that you can use to hold your assets in that are far more efficient. That an LLC being a good example, where you don't require tax filing for every single entity, right? Like you can do it all together as one. So it makes it more efficient, and you can scale and grow accordingly. So it's just, you can grow faster, I think, is the bottom line.
For sure.
I guess you can grow faster because the price points aren't as steep either. And what
sure.
about the down payment? Like, what does that look like as an investor?
So, as for nationals, Canadians as coming in, usually you're going to be looking at about 65% LTV. There are some cases where we can get that up to 70 or 75%. But for the most part, I think you have to expect 35% down payments on the properties.
But what if you were like an American living in the US somewhere? Like, is that a 20% thing? Because I heard that there's a lot of crazy 2.5%, down payments that can be done, I guess, if you're, I don't know, in the military or something, but I don't know enough about it. Like, is that also the case if you're a US person and you can get away with pretty much barely paying anything as a down payment?
There are offers from some lenders where you can get up to 85% LTV.
Right.
90 is very rare on rental loans or on 5-year term loans, but 85% you can get if you're a US citizen. And again, as you go in there are ways that you can establish credit yourself and you can get that LTV up. We have some chunks of our portfolio that are, 75% LTV, so it's pretty good.
Mm-hmm. Okay, that's cool. So you mentioned LLC, and I just want to go back to that because I always thought as a Canadian, the LLC was not favorable for, I think it was tax reasons, but I don't know enough. Like, you'd know more than me.
Yeah, no, it's a good question, right? So what our lawyers recommended on both sides of the border, we had consulted with a really great Canadian tax firm here in Toronto that specializes in cross-border taxation, and they use LPs or limited partnerships to actually hold the asset, right? But the LLCs as the operating arm. But that operating arm can operate a number of companies, a number of LPs, and then on top of that, you can have multiple assets sitting in a single LP. There is actually a structure where you can, as a Canadian, use LLCs, okay, as far as and place the entities into the LLC, and that requires a usage of a corporation as well, or a C corp, and then LLCs underneath that C corp. Now, the only and we use that structure, and you can use that structure as long as you have active employees. So as long as you have 5 employees or more that are employed by that corporation, and you can be one of the employees, you can use that structure and grow accordingly. And that one is superior because the tax rate is only has been reduced by the current administration to 21%. So you're only looking at a 21% tax rate, which is excellent because it used to be as high as 35 and 37% in the past years.
We can often, sorry, I was just going to say that we often suggest that structure for our clients as they structure into larger portfolios. Sort of starting with the limited partnership structure is better for people looking at their first or second asset. But as it grows and as they grow with us, if they're getting to a point where they can have multiple assets and US-based employees, then that corporation structure would come into place.
Yeah, absolutely. So, okay. So speaking of taxes, it is interesting because as somebody that used to listen to a lot of great US podcasts, you hear about 1031 exchanges. Essentially, you can sell your property and within a certain time frame, can't remember if it's 90 days or whatnot, you can buy something of equal or higher value and then actually defer your taxes pretty much indefinitely. Now, if you are a Canadian with a limited partnership, and you have an LLC over there, is that something that can be done? And I know you're not an accountant, you're not a lawyer. These are our opinions.
That's usually the first answer to that question.
We got to check with the specialist. But
disclaimer comes up.
The disclaimer comes up. So I'm going to make a disclaimer. So we're not accountants or lawyers, but for the purposes of discussion, right? So that's a U.S. tax law, which is an amazing tax law, and it applies to U.S. citizens, right? If you're a Canadian citizen and if you're doing this individually, you are going to be able to defer those things to the IRS. The problem is with the CRA, because the CRA does not have a 1031 exchange. And so, when you do it that way, you could be looking at some tax liability on this side of the border.
Right.
So guys, talk to your accountants and your lawyers and all that good stuff. But
that's right.
Again, these are discussions, right? So, okay. So let's talk about this, because I love real estate investing, not just for the cash flow, but the mortgage pay down and the appreciation and the fact that when on let's just talk about COVID or a downturn or something that happens. There's always going to be market cycles, right? There's ups and downs, and so it's important to buy on fundamentals. And I know you guys are in Michigan, and I know you are in Detroit. So you have to weigh the pros and cons to both. And then when I look at some cities in the US, I'm like, wow, it's 50,000. In 10 years, is it still going to be 50,000? That's the question. And then you weigh that against, $1,000 a door cash flow versus a couple $100 here. What are your guys' take on that?
So as far as downturns, I mean, obviously economic cycle, like everybody's due for a recession, usually every 10 years or so, that's been the average for the last, as far as I can remember, and so what we really specialize in markets like Detroit, which tend to be, there's a mix certainly, but there's a lot of lower income individuals. What you get there is there's an amazing program called Section 8. You probably would have heard of it or about it.
I have, but let's talk about it. Finish what you were going to say, but let's talk about it because it's not something that exists necessarily the same here.
Yeah, absolutely. So, I think one of the biggest hedges against recessionary times is government housing, right? And what's incredible and what we've done over the last 18 months is we've secured our clients' portfolios as well as our own portfolio to have approximately 65% government housing. And so, when COVID hit, obviously there was this panic and, what's going to happen? The world is ending, this was going through people's heads, right?
And in 10 years or in 3 years, it'll be something else. I feel like every year there's going to be something where people are panicking.
Right. 100%. And there could be a second wave of this or third wave of whoever, as they're predicting, right? And so, but what we've noticed is that, the panic happened sometime mid-March, right? And then we get our checks on April 1st, right? And 2nd and 3rd and, into the month from the government agencies almost daily. And so we were waiting and anticipating to see what's going to happen with those checks. And of course they come in very regularly, steady. So we didn't have to lay off any employees. All of our property management team has just been separated into their homes, obviously for safety reasons, but everybody's operating. We haven't had to let anybody go. Our business is basically the same. As a matter of fact, we've had the biggest payout in our company history in the month of April. To our investors. And we're really proud of that because, a lot of businesses are struggling right now. A lot of REITs, their stocks have plummeted. A lot of landlords are sweating it right now because they're, some rents are not being received. But, we have we're at over 90% in terms of rent collection, so we're really happy with the results so far.
Okay, good.
For sure, I was going to say too, with the Section 8 government housing, unlike Canada where, often government housing is in confined areas, low income housing areas. With the Section 8, we can get vouchers into these sort of B-class neighborhoods where we do our purchasing into our $80,000 to $60,000 colonials with sort of up to $1,100. We've seen vouchers up to $1,100, $1,200 in rent. And they blend right into the neighborhood of a mixture of working class cash tenants and the Section 8 as well. So it's good differentiates itself that way than from Canada.
Yeah, and then just to emphasize, or not to emphasize, but just to clarify Section 8. So the government essentially pays you directly for the tenants to have a place to rent. To try to essentially get them back on their feet at some point. Just is it kind of like social? Is it
totally? It's a great program. There's 14 million Americans, who get the voucher paid by the U.S. federal government, right? The Section 8 housing, and either all or a portion of their rent goes directly from the U.S. government to the property management company. So it doesn't actually go into the tenant's hands. And then, we pay out to our clients through there. So it's very secure. It takes it really up to a very secure and guaranteed rental program.
Yeah, and I think what's distinct is, a lot of the social assistance programs, let's say in Canada, the tenant would receive the funds and then they would disperse it to the landlord or not in some cases, right? Whereas this is a direct voucher that, that goes directly to the property management company, as James mentioned, and, and then we're able to pay out from there to our investors. So even, if the tenant's not living there, if whatever the situation is, the voucher keeps coming in on a monthly basis and it's covered. covered. And what's really powerful about it is that the vouchers can be increased. So you can, every 1 to 2 years, there's an inspection of the home for safety and for code, right, by Section 8. And so at that moment, if the value, the average rent in the neighborhoods is increased, you can apply for an increase in the voucher. So you can take $1,000 voucher to $1,200 now,
Right.
without the need of the tenant moving out, with zero vacancy, with zero turn costs, and you can just have that tenant there for multiple years. We had a gentleman who moved into one of our duplexes, and he was at his previous Section 8 home for 18 years. If you could imagine, 18 years of just uninterrupted rent. And when you look at investments such as Detroit, you're buying a home for $60,000, right? Well, it's going to take, let's say, 60 payments to pay off that home, and then your return becomes infinite, right? And so it's crazy if you think about it that way. And if you captured some equity somewhere in the middle there, that's even less, right? Because you can refinance that home and then just keep getting that $1,000 voucher. So it's really powerful. So we sometimes, when people look at a market like Detroit, they really need to understand the fact that that government tenant and that voucher is almost as valuable as the property itself, right? And if you can get one of these vouchers in, which is, it's not difficult to do. We have contacts to, 10 different agencies that place people all the time, and the distinct part about it is that these tenants, the average lifespan of the tenant is around 5 to 6 years, right? They're staying for that long anyways, because they have less resources to move. And, we provide really good accommodations that are, renovated and are, really in nice areas. So, and they're living there for free. So why would they move, right? So it's a really great.
So they don't.
They don't. Yeah.
Right.
And I'm guessing in a place like Detroit, it's not like Ontario, or maybe, and you can enlighten me, but I'm guessing it's not rent controlled by 2.2% of what you can increase as an example this year. And it's likely also not. So my concern doing this in Ontario is, like you said, the tenants can just call and cancel at any time, and then the payments go to them. So you're saying that the Section 8 tenants, they can't call and have the payments deferred to them. It has to go to you, and that's essentially how it works?
Yeah, 100%. Yeah,
you don't have to worry about that.
No. And, and the environment, I mean, the landlord, like just on the topic of landlord laws and all that, they're just so much more favorable in Michigan than they are in Ontario or just across Canada. They're very much in favor of the landlord. And so, essentially, I mean, you can ask people to vacate a property on 30 days notice just for whatever reason, right? Like, I'm taking it over, I want to perform renovations, whatever I want to do with the property. So if you're not happy with the tenant, you have that right. As far as, people often ask us, well, how do you ensure that your property stays intact and is not damaged by, a Section 8 tenant, let's say? It's a common question, right? And so usually, so there are rules around tenants keeping the property in good shape. And if you report that tenant, they lose their Section 8 voucher, or they have the possibility of losing the Section 8 voucher if they have a history of this, or if they do damage to the property. So essentially rendering themselves homeless, right? So we're respectful of everybody, and they tend to be respectful of our properties. We really, people, we bring them into the properties. They're newly renovated, they look great, and so we do it. We have a good relationship with these tenants, and they stick around long term.
For
sure. That's pretty good. So let's switch gears a little bit. I'm interested because you guys are, I mean, James, are you living in Ontario right now?
Yes, I'm in Toronto, sir.
In Toronto. Voytek, what about you?
Yeah, same.
So, okay, so then you look at Detroit and you're like, okay, this is a great market. You like a lot of the fundamentals, aka the cash flow. There might not be long-term appreciation, different fundamentals, but how do you then say, okay, I'm going to take my investments from here and I'm going to go invest there? Like, how did you get all that set up? And then, what do you have right now? Because we mentioned investors. Let's talk about what your portfolio looks like there.
Sure. I mean, the move was pretty simple. I mean, we tested the market because obviously, we were introduced to the market by turnkey operators such as ourselves. He just happened to be, a friend of mine, and he showed us the ropes. Now, you mentioned about appreciation, right? And, Detroit has been doing 20.5% per year over the last 5 years. Like that's been the average appreciation in real estate. So, and where we're focused in these BB plus neighborhoods, that's where those numbers have even surpassed that 20. We're in one area called Bagley has been doing a 35% annual appreciation in values since 2016. So that's the cherry on top. All the development that has come to Detroit and all the private money that's poured in has caused those numbers to go up at those rates. Now, obviously, that's not going to continue forever, and we all know that. But it's continuing in a positive direction, and average U.S. appreciation is around 5%. I'm expecting Detroit to do closer to 10%. On top of the cash flow.
How much did it decline in 08, 09?
How much you mean during that time?
Yeah.
Significant, from it was probably around 65% was the dip, like overall, from the peak, which in US real estate was 2006 until steady decline until 2011, 12. That's when things started to really turn around. And now the prices in a lot of neighborhoods have far surpassed 2006 levels, but on average, they're still a little bit below, as an aggregate, because you have some pockets that are not great.
Yeah. So I guess you got to weigh the pros and cons, right? Because you'll have like the ups and downs, kind of like maybe like Alberta or Edmonton, or like an industry that has maybe it just relies on oil and gas as an example, right? So you see a lot of Alberta going up and down often, every so often. And, Detroit, again, great cash flow, but you'll have the ups and downs. And a $50,000 house, in the next downturn could be worth 30, it could be worth 40, and then it could go back to 60, it could go back to 70. So, but it is quite interesting. So, okay, so you started buying, so what are you buying out there right now?
So we're still buying single family homes. I love that category. We've bought a number of multis for our own portfolios, like 23 units, 24 units, those kinds of sizes. We've bought a lot of duplexes for our clients. We bought some duplexes for ourselves. Ultimately, I think that, single family homes is where the most money lies. I think that, the combination, they appreciate the most by far, and especially if you're going into good neighborhoods. We're buying stuff with equity that we can refinance once we do the improvements. That's how we're continuing to build our own portfolio. We're primarily focused now closer to downtown, in Midtown, and just north of there. There are a lot of like really up and coming areas that are just ultra hot, and we're continuing to buy there. We moved into some higher, like more premium properties, which in Detroit are like 250,000 or 300,000, which it still is very low for here. But those are just like top end neighborhoods in Detroit, and those are like beautiful mansions that looks like a $5 or $6 million home in Toronto. Right. You pick up for like, 100 and do some rentals on. It's hard to pass up, and those we've kept, and we're doing some Airbnb with those, some short-term rentals, although that business is not great right now, but I'm sure it will come back. And our clients, we're recommending, buy the highest returns you can right now. Get smaller bungalows for 55,000, 60,000. A lot of them are coming with $1,000, $1,100, $1,200 Section 8 vouchers. That's right. Those returns are crazy, like 15% cash on cash returns. We've had one customer that bought one, it's a 20% cash on cash. So the returns are phenomenal, and especially when they're coming with that Section 8 tenant, it's amazing. And our clients are buying a lot of those right now, and that's where the smart buys are right now, I believe.
Who are the clients? Like, do you have is it a REIT? Do you have an LP set up? Are you doing JVs? Like, what's the setup?
Yeah, so our clients are real estate investors that have properties here, that are, some of them are their first venture into the US market. And, some of them are selling properties here. Some of them have bought properties in markets like Florida for, $50,000 in 2010. And now they're worth, $300,000. So we give them the opportunity to refinance those. We have a lot of good mortgage brokers that work with our clients in the US that are able to free up capital on that side of the border. You know, and then we have some, you know, just some bigger companies also that are just buying like larger chunks, you know, for their portfolios. So it's a mix of people.
Yeah.
So so how do you set it up? Do you bring them into the Detroit? Do you find something? Like, walk me through the setup of doing a deal with somebody. If I'm interested in buying in Detroit and I want you to help me.
Right.
Well, I would reach
go ahead,
out
James.
to,
Yeah, go ahead, James.
no, totally. So typically they you know, we source our clients through our webinars. I go to a lot of meetups myself and such. If I find people interested, I'd bring them in. We would show them our portfolio of what's available, right? And then we would look through the different single family homes, or if they're looking at multifamily, we would sit down with them and see how we could help them to meet their investment, what they're looking for, whether it's cash flow, return, or appreciation, or a combination of both. You know, and then during regular times after COVID, hopefully we'll be going back down on a bi-weekly basis for our client tours, where we meet our clients at the Marriott Renaissance Hotel, just through the Detroit Windsor Tunnel. You know, we have a extended row SUV. We meet around 1 o'clock. We go out for about 2 to 3 hours. You get to see the active listings, go through the neighborhood, see the redevelopment zones of Detroit, get that feel and that time, you know, with one-on-one with us in the car, see the listings. You get to enter a property, maybe meet our property management. And it's just really amazing. I remember the first time that I went down to Detroit when I started to work with the company. Just, you know, I had these thoughts of what Detroit would be like. And when I got down there, I just saw a city that was going through a complete renaissance and revitalization. It's got all new sports arenas downtown. The major arteries going into the neighborhoods where we purchase. I've had a lot of funding from the federal government. You know, the parks and green space are there, the public transportation, the Q line, and it's amazing. So we so that we, like I was saying, we buy in these key high appreciation neighborhoods. We show them the listings, and we try to find you one. And if you like it, we would put it under contract, which would sort of secure it from our internal market and put a purchase agreement together, and then you would start your due diligence period, right? And at the same time, I'd be putting you in touch with our Michigan attorneys, who would help you with the U.S. entity formation and corporate setup, get your LP structure going, and get you ready for acquiring the properties and ownership. And we've been moving the property through the process, and it's starting a 300-point inspection with our pillar to post Michigan inspectors, who would go into the property and take a hard look at it from top to bottom and do a report. And then Voytek and the contractors would, you know, address any discrepancies or any deficiencies, should I say, in the property, and get it in a high state, getting ready for maximum market rent. So that's kind of like the process would be, sort of to introduce you to the market, get to meet and connect with us, take you down to Detroit, and show you the properties.
And then, you know, and then we would help you refinance them, you know. So a lot of our clients will bring money in from Canada, either from lines of credit or from, you know, from sale of properties. And then, you know, a lot of the lenders in the US will require a 90-day seasoning, especially for new people that they're coming in for the first time. It's only 90 days, right? That you have to own a property. During that time, we'll tenant it, we'll stabilize it if it hasn't been done already. And then the property is ready for appraisal and for refi. And then, you know, and then we would help the clients pull out, you know, 65 or 70% of the money out, and then they can leverage that to buy subsequent assets. That's what a lot of people are doing. So they'll leverage that 70% and then buy, you know, let's say $100,000 they pull out, so they can buy another $300,000 worth of assets, you know, right on the spot. And so then that way they can, you know, they'll get a leverage portfolio within about 90 to 120 days.
Okay, cool. How do you guys make money? Like, do you take a cut off a certain amount over time, or like do you just take a cut off the top, or are you coaching? Like, I'm trying to figure out how you guys have the business piece around it.
We don't. We just do this out of the goodness of our hearts. So we act as, you know, we act as general contractors. So we do all the renovations, right? So we'll find the properties. Often they're distressed. They're requiring, you know, tier 3 rehab. So, you know, we might do everything: electrical, plumbing, roofs, windows, kitchens, like absolutely everything. So that's, you know, one set of circumstances. A lot of times we try and find stuff that maybe just, the things of value, like the kitchens and the bathrooms, carpet paint, like more tier 2 stuff that needs to be done to the places, because that drives the equity the most, we find. So we'll find those types of properties. So essentially we're getting paid as general contractors. We just take a fee for general contracting, and then we turn it over to the client. The client owns the asset themselves. They have the deed. We're not a fund or of any sort, or any sort of syndicated mortgage kind of company. Like you own the asset, you can sell it, you can refinance, you can do whatever you want with it. Now we also have a property management company which we own and operate. We've had a number of adventures with different property management companies in Detroit since we were there, and so about a year ago we decided to form our own and really, take full control of our own portfolio, but also of our clients' assets. And so we've been running that. And of course, you have a choice, like we can send you to other people if you want, but we feel that, we're doing a good job with our property management company. And so, we charge a fee of 10% per month, which is, standard fee in the US for, gross rent for management.
Okay, that's cool. So you make money off of the renovation and the property management, but you don't take it's not like a 5-year JV where, you take that's good. Okay. I was wondering, like how you have that set up. So now in addition to that, you have your own properties as well that you own and you manage under your own portfolio.
Yeah, that's right. Yeah, we started by buying our own, and we really just wanted to have a significant amount of cash flow coming in every month, so we could just hang out and go on vacations, right? So that was the plan. So, but it turned into a business, and so we obviously manage our own portfolio at the same time. We continue to buy. I mean, we've bought probably about 10 properties last year for our own portfolio. So we're continuing to buy in the marketplace. We believe in it. We're really excited by it. We're just getting into new neighborhoods, buying better properties, I think, and doing better job renovating and getting higher rents for our clients. So that's to progress.
All right, very cool. Now, are you also advertising for those deals? Like, are you finding them off market? Or are they off, on MLS? Like, how are you finding them?
So, we have a team, an acquisition team that goes out there and, and looks for deals. We deal quite a bit with different funds and larger companies that have maybe gone into the market, 2010 and bought like 5,000 homes, and they've done various things to them in terms of renovations. And now they maybe are selling off 100 or 200 there, so, they won't sell to individuals, but if you come in and buy 20 homes or 30 homes, then they'll talk to you, right? So that's been a great source. Sometimes it's just individuals that will come to us and say, oh, we know these guys are selling their home, or, now there's a little bit of panic selling going on in the market, although it's not excessive, and it's not really on MLS. It's just private deals that will, some wholesalers will come to us and say, okay, well, these guys are selling 2 homes or 3 homes, kind of the mom and pop businesses, that already were kind of maybe struggling, only had 1 property or 2, and now they're unloading. So there's a lot of that. We used to deal with auctions, but they became a bit of a waste of time because they were great as long as they were kept local. What they did is they now open them globally. So anybody can go, internet all over the world and purchase these homes. And honestly, most people have no clue what they're buying. And, they buy a home because, it's 30,000, but meanwhile it's in a war zone, because there are tough spots in Detroit. And so, and the home, needs 30,000 into it, but it's only worth 40. So you're in negative 20,000. You don't even know it, right? And then it's also impossible to rent out because it's in a tough neighborhood, right? So, so we've really stopped dealing with auctions, and we just have our own network, just people that are going out there constantly looking for deals, and that's what we can continue buying,
Okay, awesome. And, when I think of Detroit, I think of really cheap properties, and I think of like, there's really good areas like you mentioned, and then there's like really bad areas, and it could be a matter of a block away, and then all of a sudden you're in a war zone. And a war zone in the US is not the same as a war zone in Canada, right? Like how you have like A, B, C, and D. We don't really have a whole lot of D's or D class, areas here.
Agreed. Agreed. What in the
Some
US you have
different.
like you have A areas, and then across the street you might have a D area, but that's consistent right across the country. New York, if you go to Manhattan, you went to certain areas where it was, you were Central Park, and then you got north, and then it was a bad neighborhood. Now, like, even Harlem is changing a lot, and it's great, but that's the disparity, and so you run into that in Detroit in the same way.
For sure. And I think that's where, our experience and expertise and where we're purchasing just comes to be show its value so much with our client base, right? People try to go down there on their own, and you can, but good luck trying to find like the really good areas, because if you're just buying off, even the same zip code, or like you said, just like a block or two away, you can go from B to D quite quickly.
Yes, absolutely. So it's important to have a team. It's important to have people on your team that are investors, know how to run the numbers.
Yeah.
It sounds like you guys are doing a great job out in Detroit and helping a lot of folks that are here looking to diversify a little bit. I think personally, this is just my opinion. Even though I don't love the LTB and the RTA in Ontario, I love Ontario for a lot of fundamentals that it has. I love the fact that with the ups and downs, it's not going to go as down as a Detroit. However, when you look at Detroit and you look at the cash flow that you can get, you're not getting that in most of Ontario, right? The GTA, you got to go a couple hours out in order to get, something. And even the something is probably, in my opinion, a quarter of the cash flow that you're getting in Detroit. So maybe, you diversify, and again, everyone's different, but you diversify a little bit with the ones that will give you the higher cash flow. And then you diversify and you add some here where you're going to get a little bit more of that stability, the appreciation over time, the low vacancy rate. So I can see how both can fit into the portfolio, just like paper assets, right? They have a place in everybody's portfolio. It's just a percentage of how much of that it is.
Agreed.
Yeah.
Agreed.
For sure.
So the next part of the podcast is a lightning round. So I'm going to ask you each a series of questions. You're going to give me the first answer that comes to mind. These are supposed to be just really quick, first thing off the top of your head. You ready?
We're ready.
Yeah.
All right. So question number 1, what is your favorite real estate investing book?
Kiyosaki's Rich Dad Poor Dad.
I would agree with that. Yeah.
All right.
I just read it as well.
It's a good book. It is the answer that about 90% of the guests have mentioned.
Well, we're glad that we fit in that category.
So if anyone's listening to this and haven't, and you haven't read this, Robert Kiyosaki's Rich Dad Poor Dad, it's probably about time that you take a quick look at it, or read the Coles notes. But it's definitely seems like it's changed a lot of people's lives. Question number 2. I don't know if you listen to podcasts, but if you do you have a favorite?
Yours.
Like Joe Rogan.
Have you actually ever listened to it?
I have.
Oh, have you?
Yeah.
Other than mine.
I listen to Joe Rogan.
Howard Stern.
Okay. All right. Good ones. Number 3, what do you like to do for fun aside from work and real estate?
For sure. I'm into exercise and healthy living. I love to run and spend time with my young son. I like to play tennis and just enjoy getting outside as much as possible. Hopefully, it's going to have a good summer.
And that was James. That's good. And Voytek, what about you?
I like to go to Ibiza.
Ah. That sounds like way more fun.
It does, right?
All right. Number 4, if you lost all of your money and your assets tomorrow, how would you start again? James, we'll start with you.
I try to find Voytek and stay as close to him as I can.
I would do exactly what we're doing right now.
Yeah.
We would just, we were talking about, about COVID and what can happen. And, there's that moment of panic about, what if you lose everything? And, and I said, look, we just do exactly what we're doing right now. And you'll be able to build, using BRRRR method, you're able to start from zero virtually, and you could be up and running with a significant portfolio in a matter of like 24 months or less, so depending on how quickly you want to move. So I would not change a thing.
All right.
That's a good answer.
All right. And last question. If somebody has $50,000 and they want to get started,
Yeah.
How would you recommend they spend that money? James, we'll start with you.
Single family home in Detroit for sure. I would approach us either through our website, or you can email me at james@usproperty.ca. I'll show you some listings. We have some great single families in that budget, with some equity capture. I think it's a way to go with us. You're going to get great cash flow and appreciation. We can get some equity. We can get some refinancing on that property for you and get you into a second property within 3 months. It's a great time to do it right now. The prices have come down. 100% single family home with us in Detroit.
Okay. Voytek, what about you?
I agreed. I mean, look, that's how we started there. I think that you can buy. I mean, we have a gentleman right now who's buying a home from us that's worth, probably 85,000. He's picking it up for 60. So, I mean, it doesn't seem like a lot of money, but you can repeat that 3 or 4 times in the course of a year, and using Burr, just keep pulling that money out, You can have 4 houses by the end of the year with 0 money down. It's sky's the limit, and just keep going, keep repeating.
Yeah.
All right, awesome. I always ask this question after the lightning round. James, you kind of touched on it, but if the listeners wanted to reach out and know more about you, where can they go?
Well, I would definitely start by going to our website, usproperties.ca. We have it gives a great overview of our company and our Detroit program. We have an event section there that's going to highlight either our upcoming webinar or in-person presentation events and Detroit property tours. I've also started a meetup group, how to purchase cash flowing real estate in the United States. We're going to be putting our events on there. I wanted to sort of create a place where we can educate potential investors on how to enter the U.S. market and purchase cash flowing real estate. So I'm excited to be on Meetup and get to connect with people and show live deals. And so just that, I would recommend just reaching out to Voytek or I at usproperties.ca.
Okay, awesome. Voytek, anything you want to add there, or that's the best way for you as well?
That's the best way, yeah. Events page, usproperties.ca. Or you can email James at usproperties.ca. And our events page showcases our next webinar. So, whenever your audience hears this, if they want to go there, that we'll have an upcoming webinar, they can register and they can learn a lot about it. We have a YouTube channel as well. We've put together a couple of great movies of tours. We had a camera follow us around for like 10 hours in Detroit. So you really get to see, all the neighborhoods, and really like the architecture is spectacular. I really love some of the videos. So if you go to our homepage at the bottom, there are 2 videos there that are really great. It's like a 15-minute video, and it's really in place of the tour, which we can't do now because of the border, but soon.
Okay, awesome. Guys, thank you so much, Voytek, James, for being on the show. It was a pleasure having you guys.
Thanks,
and thank you for sharing your insights and everything that you can share within about an hour time frame. So really appreciates everything, and thanks for being on.
Thank you very much, Sarah. Thanks, we appreciate it.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?